if you're wondering where exactly you should be investing in Wagga Wagga, then you have clicked on the right video because I'm going to go everything into detail about Wagga Wagga, the best locations to invest in, the actual current market conditions of it, the public housing with it, the economy, and more. So you need to make sure you watch the video all the way through till the end to fully understand what is going on in Wagga Wagga, where the best places are to invest, and more. And Wagga Wagga is certainly an interesting location because it has many different suburbs, all the way from the price range of about 400,000 to about 600,000 and a bit more. But there are some pockets that you should definitely not be investing into for various different reasons, and some pockets where you can consider investing into. And while everyone has been looking at markets like Queensland, like Perth, like Melbourne, Wagga Wagga has been steadily performing at almost 6% over the past 3 months. That's a lot of growth. On a property that was worth $400,000 over the past 3 months, it's grown by 6%, adding $20,000 in equity. And you can see by this map that a lot of locations like Ashmont, Glenfield, Tolland, and Mount Austin have been growing by roughly 3 to 6 or maybe even 6% above the market. And that's quite extraordinary. And people haven't been looking at these markets. Even myself, some of these markets don't come up on the radar because I put certain metrics, which I'll go into, which would eliminate these locations. But it was actually the community members who brought my attention to the activity that's happening in Wagga Wagga because we have a wide community that are investing in different locations every single month. And so if you haven't already, you make sure you need to jump in to the private community. We have over 150 members talking about different locations, where to invest, different resources that you can utilize to make sure and accelerate your property journey. It's an absolute no-brainer. There's exclusive content, there's property templates and links, and advanced property resources. And if you want to know what that looks like, we're talking every single day about different locations. We have even mortgage brokers who are within the community helping each other out. We have weekly community calls that we will have access to past and present. And we talk about different locations in different states in Victoria, New South Wales, Melbourne, and more. So if you haven't already joined, then you're definitely going to miss out on the next best opportunity. So make sure you hop into the private community today. Alright, let's get back into the rest of the video. Now that we've established that Wagga Wagga has been growing over the past couple of months, the next best thing to do is to talk about which locations are the most ideal to invest into. And if we start to look at hashtag about Wagga Wagga, we can start to analyze the best locations that we should invest. And if we go to my strategies, and I have put all these filters in you've seen in my previous videos, if you have not, definitely go check them out. And so when I put my strategies and I put some basic filters like days on market, stock on market, price change, you can almost instantly see that there are no suburbs coming up as a potential investment location into Wagga Wagga. And that's not because price growth isn't happening, because clearly we can see over the past year, 8% growth, over the past quarter, 1 to 3% to 6% growth in total in Wagga. So what is really happening here? Why aren't locations coming up? Well, that's when we need to tweak the metrics to make sure we capture in as enough suburbs as possible. And I already know this because I've done the research that if I start to tweak the vacancy rate, we can see our first suburb actually pop up. And that's Mount Austin in Wagga Wagga. Mount Austin is in a small pocket in the sort of south of Wagga. And we can see the reason is the vacancy is a little high at 2%. We can also see the renter to owner occupier ratio around 45%. And this will sort of become a reoccurring theme throughout Wagga Wagga of the suburbs that I will show you. And if we adjust the next metric slightly, renter to owner occupier ratio to 60, we can see another suburb actually pop up, which is Ashmont. And Ashmont is another location very similar to here. Ashmont, Mount Austin, and then you've also got Tolland as well. And so if I even start to loosen the metrics just a little bit more and put the vacancy to rate to 3%, we can see another suburb pop up. Tolland. So we got Tolland, Mount Austin, and Ashmont. And if you look at this, what we're seeing this in the market indicators is that we have strong supply and demand. Even if I put this down to 1, these suburbs will still remain there because there is very little stock on the market. And the properties are selling very quickly, almost under 50 days for all these suburbs. Ashmont in particular is sitting at 34 days. But we can understand that the rental market pressure isn't as strong as we'd like. Because of the high renter to owner occupier ratio and vacancy rate, this is being reflected in the lack of rent increases over the past year. Tolland, for example, had negative 0.22, Mount Austin 0.46, and Ashbourne at 2%. So not very high. And this is why it's so important to look at the rental market indicators like RO ratio, vacancy rate, and yield to understand what is happening on the market. So, based on the data, we can see that the best locations to possibly consider investing into based on supply and demand is Ashmont, Mount Austin, and Tolland. But the trade off is then you have to understand that it'll be very hard to raise rents, possibly more difficult to find tenants as well in these locations. And there's a bit more to understand about these locations, so make sure you are watching till the end of the video because there's a lot to break down. And if you only watch half of it, then you're never going to understand how to invest into property properly. And one other little thing I want to show you is that if you start to increase the price a little bit, so I put the budget up to 700,000, we get locations like Glenfield Park and Estella. But to be honest, when you're spending 700,000, I think there's better locations to invest into throughout Australia. Hence why I keep the budget to a minimum when you're considering Wagga Wagga, right? You want to buy at the right price points, even in regional cities. All right, so we can do a little bit more of a deeper dive into places like Ashmont, and we can see that over the past year, it's had 10% growth, which is quite extraordinary. Some would say it's even a hot market at this point. Affordability is just under 30 years, which is acceptable. Stock on market, it says it's been rising, but it's not reflective of what the market is doing. So it's best to double check with a local agent. As well as days on market, demand is rising, which is really good to see. And the whole period is 10 years. Now, this is very not indicative, I feel like, of what the market is reflecting because the renter to owner occupier ratio is at 50%, which is quite high. It's a low socioeconomic area and the vacancies are also high, and it's been rising over the past year. Very similarly, we look at Mount Austin, 8% growth over the past year, 45 RO ratio plus a low socioeconomic score, affordability under 35 years, which is still good. And here we look at the stock on market and days on market. It's reflecting a very sort of balanced market, but there is still a lot of price growth happening. So it's not exactly a hot market, it's more of a warm market with a lot of price growth, which is very interesting to see. Not many markets reflect this. Vacancy rate is also above 2%. Likewise, when we have a look at Tolland, we can see that over the past year, 8% growth, very good. Renter to owner occupier ratio, 43%, very similar. Affordability above 35 years, which is not as good as I'd like to see, to be honest. And stock on market, days on market, very similar, reflective of the rest of Wagga Wagga with a vacancy rate of above 3%. And you can see over the past year, you cannot raise rents because there's just too many renters in the area, too many investors, competition is high. Very similar with Mount Austin, only less than 1%, which is ridiculous. And when we have a look at Ashmont, again, only 2%. It's not great, it's not bad, but there's a lot of renters in the area. And what we need to talk about with these locations is that one, supply and demand is good, right? There's price growth happening, there's activity happening. You will most likely get some sort of equity over the next 12 months if this continues to happen, if this trend continues to happen. Of course, do your own due diligence. I'm not a god, right? But what you need to accept is that the renter to owner occupier ratio and vacancy rate are really going to stagnate your rental market increases by a lot. There's just so many renters and investors in this area. Not only that, these areas are low socioeconomic areas. So when I actually look at the public housing of these areas, you can see that there is a significant portion of public housing within Ashmont, Mount Austin, and Tolland. And so you really need to be very specific about where you invest in this. You can see on this left-hand pocket in Ashmont, there has been very little, or there's an incredible amount of public housing, almost 50%, 60% in some of these areas. So you want to be very specific about the locations you target. Within Mount Austin, you can see almost 70% of the location is public housing. It's not great. And if we look at Tolland, we can see that almost the whole left section of Tolland is all public housing. Again, that's not something we want to touch. We want to buy on the right-hand side of Tolland, most likely, right? So when you consider buying into Wagga Wagga and some of these locations that are cheap, but it will have low socioeconomics, have high RO ratio, low hold periods, it's because it's a less desirable location of Wagga. And there's nothing wrong with that, right? Just because a location or a suburb has public housing doesn't mean it's going to stop price growth. However, as an investor, you need to be avoiding buying into these pockets. You need to buy in the good pockets of the suburbs to ensure that your property will not be impacted when price growth does occur. And if you're wondering how I know all this information, and if you want to learn it yourself, but you don't want to pay an arm and a leg, then you need to join the Property Blueprint program, where I actually teach you step by step of how to invest into property. There will be over 8 in-depth modules plus 60 plus videos and hours of content. You will have your investment strategy tailored towards your goals by going through this education program. You will have my help every step of the way, and you will also get 6 months free access to the private community. So it's an absolute bargain because it's worth over $200, and pre-order or pre-launch special of the property blueprint is $299. So if you're wondering where I can learn how to invest in property, then you need to click on this program because it's going to teach you everything you need to know. It's a once-off payment, it's a lifetime access to the program, and I will be adding more and more information to it. So make sure you get it now because the full price will be $599, and by that time it'll be too late. And it's only for the first 20 members. So make sure you jump in. All right, let's get back into the video and let's talk about its economy and where it's at and how it's performing. Now, overall, Wagga's economy is actually very healthy. Its GRP, or gross regional product, has been growing over the past couple of years at 6.2 billion, then 6.8 billion, and then 7.2 billion. So there's a lot of growth happening in terms of the business and the economy side of Wagga Wagga, which is what we want to see. We want to invest into a growing economy because that will mean more jobs, more businesses will come, more investment, which brings more people, which brings more housing demand. That's basically the simple method, right? And then the other thing I like to also really look at is when we look at the economic indicators and we look at unemployment, we can see that unemployment has dropped over the past couple of years. So people are being employed into the area, which is really good for us to see as investors. We want unemployment to be very low. If unemployment is high, that means people will look to other places for jobs, which means that they will leave the location, and then that will cause a supply increase in houses in the Wagga Wagga region. And what we also want to look at is when we go to local employment and we look at employment by industry total, we can start to look at what jobs are being there. We can see healthcare, construction, education, training, retail, trade are sort of the biggest sectors, with healthcare taking about 20%. If a certain industry takes up no more than 25% of a location, then the location is fairly economically diverse. If it starts to get more than 25%, that's when it gets really risky, because say that economy collapses, that could cause a lot of people to leave the region because they no longer have jobs, which affects price growth. But when we actually look at Wagga Wagga itself, we can see that there is a university here, right here, Charles Sturt University. There's a college there as well. We can also see Wagga Wagga Hospital and another hospital right here. So there are major employers within the region as well. You also have the RAAF base, which is a major employer within the Wagga Wagga region. So overall, Wagga Wagga is economically diverse. It's a good location to invest into long term. It's just the locations that you have to be very specific about where you invest into, because there are good pockets and there are bad pockets. So of course, there is more and more activity happening into Wagga Wagga. And if you're wondering whether you should invest into the location or not, you should do it with caution, right? There's price growth happening, there's activity happening. You should confirm it with sales agent, right? And arguably, the locations have overperformed over the past 10 years or so at averaging about 10% every year. So the location has been overperforming. However, there's still growth happening. There's still activity happening, but it's all about picking the right pockets, because if you buy into the wrong location or it's a wrong pocket, it could really detriment your portfolio. So I hope this video has helped you guys about where you should consider investing into Wagga Wagga, the locations, the pockets, the economic diversity, the type of investment. This could really help you in your investment journey. So if you liked it, make sure you leave a like in the video, and also make sure you join the private community, right? We talk about different locations every single day. And if you aren't part of the community, then you are missing out, right? You will miss out on the next best investment location because you are not ahead of the curve. So make sure you jump in. It's an absolute no-brainer at $35 a month. Till next time, thank you.